What's going on, guys? David Piatek here. Today I'm going to talk to you about a pretty important program that the VA is ending officially as of May 1st. Now, this is the VASP program offered by the VA. It's the Veterans Affairs Servicing Purchase Program. So basically, in a nutshell, this program was designed for veterans that are experiencing hardship due to consequences of COVID-19. So if you guys may not remember, is that during COVID time, if you couldn't make your payments, basically you'd negotiate with the bank for them to defer X amount of payments onto the back end of the loan. And then what was supposed to happen is that when you went back into making payments, you would just go back to your regular payments and they would defer the additional amount that you deferred on the back end of the loan. So when you sold the house or refinance, you'd pay that money back. Well, what happened is there was a total kibosh on that. They basically didn't have a plan. Servicers didn't follow that. And then the VA came up with this VASP program to help military members. Now, this came out officially last year to be able to help veterans through this process. Now, basically, they said that this program is going to end, and there is currently no replacement for the program, which I think overall is a negative, obviously, for the veteran community. And that's why we're also seeing a large increase in VA home loan foreclosure. So a lot of veterans that thought this would be a very helpful piece for them has now turned into somewhat of a nightmare, to be honest with you. So we're going to keep you guys updated as that goes through it. And one of the things that they did talk about, which is something that we touched on when we originally did the video, and I'll link that down below, kind of explain the program and all that stuff, is that the VA came out and said, like, look, we are not in the business of servicing loans and doing these modifications, which is something that we touched on as a possibility. So if you are trying to get into this program because this affects you directly, please make sure you reach out to the servicer. You cannot elect to be put into that program, like calling the VA per se to be able to say, hey, can you please help me with this program? Because again, it goes back to the servicer, them actually electing you to be a part of this program. So obviously huge implications with that. And, you know, in a greater scheme of things, that's why it's so important to budget for home ownership. And during this COVID time, a lot of people did lose their jobs. Some people use that program to help them get through those hard times. Now, a couple options that exist if you are in this position. You know, historically, values have gone up, but every area obviously is going to be very different. So you really need to weigh your options on your benefits, because a couple things to know and kind of some outs that you may have. And again, this is something you got to talk with the servicer, maybe talk with an attorney. I'm not an attorney, to be able to go through what's going to make the most sense for your individual situation. So a couple things are going to be lined up. So one, if you're, one, you have to figure out what the payoff is for your property, right? So even if you, let's say you owe $200,000 right now, but if you were to request a payoff, you may see a negative balance on there that would have to get paid off. And it's important to know with the next step, because what if you can sell your property and be able to actually get out from underneath this program, beneath your negative equity, quote unquote, that you have because of the servicing program. So for example, if you have a current balance of $200,000 and then you have a a deferment from when you did this program of $50,000, but you could sell your house for $300,000, that might be a better option than really going through this foreclosure process. Now, what does that timeline look like? If you are, trying to hold off through this May 1st program ending and then them announcing a new program, then it makes sense to hold off, at least say from a personal perspective, it makes sense. But if you're in a position where this home is going to go into foreclosure, you want to take control of your situation, then you might look at just selling your property outright. Now, if you've been late on your mortgage payments, obviously it affects your VA home loan, because one, it affects your credit report. Now, on a side note, I've seen some credit reports where they've actually not reported to the credit bureaus, which is interesting. but a lender's still going to do a verification of employment for your next purchase. Another key benefit to selling your property is that you could at least reinstate your benefits, because if your home sells and the bank can't recover that money for whatever reason, then it's going to show up on your certificate of eligibility as a loss of those benefits. Now, if you have a foreclosure and you lose a portion of your benefits, you still have the other half or whatever portion you have left. And I'll drop a link down to a video that I did about having multiple VA home loans. This multiple VA home loan component is that if you have a first VA home loan and you lose those benefits, then you still have remaining entitlement, really depending on your situation. So that first would kind of be that, hey, you've lost that portion of those benefits unless you pay the VA back, which you do have the option of doing. But again, I don't think it's not ideal. And then depending on where you're at from a market perspective, it's better to sell your home, pay off everything, and then still have your full VA home loan that you can use at any time. Now, if you have lates on your mortgage, typically you're like 6 months to 12 months out from being able to reuse your VA home loan. We did a video on what an automated approval versus a manual underwrite looks like. So it just really depends on what your financial picture looks like. So what I'd encourage you to do is reach out to the VA and see what options you have, because they are pretty good about helping people with that. And you actually reach out to the VA regional loan centers, and I'm going to drop that link down in the description as well, so you guys can reach out to them directly. You may want to contact the servicer and see what additional options you have. I know I've seen, talking with a couple of people, that servicers have put them into these loan modifications where their payment actually has gone up. And so why does that happen? So what they're trying to do when they do these loan modifications is they take the current balance you have plus the deferred balance you have and then come up with a new payment so you can holistically come current on the whole piece. So just double check what those agreements look like, what the payments look like on those. Sometimes they'll also have like negative escrow balances. We've seen that as well. I mean, we've seen crazy things. We've seen loan payoffs, we've seen negative escrow balances, and then we've seen loan modification balances on top of that. This is why you need to know the whole picture going into this, because you don't want to be in a position where you're thinking you're going to sell your home, get all your benefits back, and then you're actually upside down and you still lose benefits. Those are all things to consider. Reach out to the VA, reach out to your servicer, reach out to an attorney that potentially could help you with that. A lot of moving pieces to this, but want to give you guys, keep you updated on this piece. And we'll definitely do a update to the video once May 1st has hit, and hopefully they have a replacement program for this, which I think, from my perspective, right, the VA isn't supposed to be really a servicer, even though they do service some programs like the NATO program, which is the Native American Direct Loan Program that they do. But I think them getting more involved with the servicers to see how they can help veterans get into modifications that are beneficial. And as we see, interest rates right now have been fluctuating greatly just because of recent economic events that have happened. It might be a benefit for folks if rates drop, then be able to get into loan modifications where it's actually favorable for them. But remember, they're still, typically are going to be a higher payment because you have a higher balance than what you're actually currently paying on. All things to consider throughout this. So make sure you guys subscribe to the channel, like the video, share it, because there's a lot of veterans that are affected by this. That way we can get the word out. And then again, we'll be doing an updated video here in the next couple of weeks talking about these changes and hopefully a replacement program. Catch you guys in the next video.